Well, my name is Mohammad Faisal Mujahid, and this video presentation, is in regards to the assignment of accounting theory, in which my part is that I need to give you the introduction. Well, the introduction is in this presentation, we will discuss the fact how Australian companies adopted IFRS and their impacts on companies' assets, liabilities, as well as its general in equity. As well as equity in general. The effects of IFRS is not consistent across all approved organizations as well as institutions authorized by Australian Prudential. So the prudential problems which we have the Australian first of them is that the Australian accounting standards were in practice before the execution of IFRS. The second is that financial assets have currently been realized at historical cost. Third is AASB 19 categories assets into major segments. First, financial assets which are possessed for trading or in other ways labeled at fair value by means of profit and loss. Second, the maturity assets which are measured at amortized cost. Third, loan as well as receivable which are also measured at amortized cost. The IASB is presently recognizing tactics to confine the overview of the alignment of the fair value along with at least one specific jurisdiction. European Union has engraved out the fair value choice from its variety of IFRS standard. About this presentation, next Jawad will gonna continue and provide you more information regarding this.
Sorry. Hi, I'm Sharjeel Ahmed, and my part is implications of IFRS on Australian organizations. IRS were generally to consider listed companies and their reporting ways to precise. Some of insightful benefits are augmenting comparability among organizations sector-wise as well as different nations, and high potential of organization to embrace cross-borders catalog as well as finance source. IFRS was functional public as well as variety of companies that are equity companies are limited by guarantee. Small and medium-sized segments has been as essential provider to economics potential in Australia. Now I would like to call my next partner.
Hi, my name is Jawad, and I'm here to present the problems with executing IFRS. The implementations of IFRS have affected many aspects of financial reporting. There are two main problems that we discuss in this presentation. That is grouping of capital instruments and derivative instruments as well as hedge accounting. So the first one is grouping of capital instruments, that is according to AASB 132, depicting financial instruments indicates a much significant explanation of equity as well as on the preliminary implementation of IFRS could lead to specific type of preference shares along with hybrid instruments which presently is categorized as equity and reinstated as liabilities. Derivative instruments as well as hedge accounting under AASB 139 as such. All such derivatives instruments shall be measured at their respective fair values. This is a complete withdrawal from the present treatment for derivative instruments that are circumstantive non-trading conditions of ADI like loan portfolios. So I would like to invite my other partner who is presenting the effects of adopting IFRS equivalent to Australian accounting standards. Please come.
Hi, myself Abdul Aslam, a student ID EMV 21539. I will discuss the effects of adopting IFRS equivalent to the Australian accounting standard. The Australian accounting standard abroad has been adopting IFRS from its effective date, that was 1st Jan 2005. The AASB has provided Australian similarities to IFRS as well as urgent issues. Team has provided comprehensive consistency to IASB comprehensions initiated by IFRS committee. The AASB has delivered Australian counterparts to IFRS, and these Australian counterparts to IFRS has mentioned to henceforth as AIFRS. So the acceptance of AIFRS would be the first immediated in group's annual report for the year ending June 30th, 2006. In some circumstances, selection of accounting strategies are accessible involving elective acceptance underneath accounting standard AASB 1. First time adoption of Australian equals to international financial reporting standards. Now over to Ibrahim, brother.
Hi, my name is Muhammad Ibrahim, and I will continue the effects of IFRS. The predictable financial effects of accepting AIFRS are comprehensive underneath an explanation of the alterations. Tax merging legislation coming under UIG 1052 tax consolidating accounting. The society as the lead organization in tax integrated group will be essential to identify the present tax payable of the tax combined subsidiaries beside deferred tax assets linking to tax losses of these divisions. Now, influences of implementing. So the society peculiar tax sums will be measured by means of one of the satisfactory distribution approaches in UIG 1052. This varies from the present accounting strategy underneath which the society recognizes current besides deferred tax amount connecting to transactions. There would have been no influence on the annual report of society. So now Ali will continue.
Time for giving me chance to give the presentation. I will conclude our presentation with the last topic, which is effects of accepting Australian equals IFRS. Instruments. The group will be taking benefits of the exception accessible under AASB 1. Apply AASB 132 financial instruments. Disclosure in addition presentation as well as AASB 139 financial instruments. Acknowledgement besides measurement applicable only from 1st July 2005. This permits the group to put preceding Australian GAAP GAAP, which stands for General Accepted Accounting Principle, to the relative material of financial instruments, which comes under the possibility of AASB 132 as well as AASB 139 for the 30th of June 2006 financial reports. So that's it from my side and our presentation. I hope you guys like it. Thank you.